Hey guys, back with another daily update video. It's the end of the week. It's Friday, June 12th. It's 4:11 p.m. so the market just closed. And this is the big board from yesterday. So I'm going to refresh the screen to see how we did today. And a lot of green, almost flipped, right? So it is green, but obviously we didn't go back up to where we started off yesterday. But like I said, we were pretty much trading sideways for the most part. A lot of these stocks are up about 1%. AMD, the stock that I have some options plays on this week, AMD was up 1.6% and Micron was up 0.4%. So, you know, overall what we expected. I did find this interesting chart that someone had posted an article on MarketWatch, and this past Thursday or yesterday, 6/11/2020, it was a overall negative almost 5.9% decline in the S&P 500. So this chart maps out some of the largest single day declines in the S&P 500 dating back to 1955. And then what it does is it looks to see what did the S&P 500 do the next day, that week, next month, 3 months, 6 months, and for the next year. So very interesting. If you look at the most recent biggest drawdowns in the S&P 500, and you can see that 1, 2, 3, 4, 5 of these were just this past year. For example, on March 9th, which was a Monday, the S&P 500 dropped 7.6%, but then the following day it was up 4.9%. So actually, all the way dating back to 2008, the drawdowns that were 5, 6, 7% or more, the very next day were very green at 6, 9, 4, 3, 6%. The most recent one was March 18th, where we dropped over 5%, and the next day was pretty much sideways. It was only up 0.5%. And then the following week, it's kind of 50-50 as far as red days and green days overall. And then the following month, a lot more green. Following 3 months, mostly green, at least recently. If you look even further back in 2008, it wasn't looking so great. It was pretty much red for the next 6 months or so. But these numbers are still up in the air because it hasn't been 3 months or 6 months or a year yet since these drawdowns. But it's interesting. So let's take a look to see what the SPY did today. So taking a look at the SPY, or the SPY, which tracks the S&P 500, it was up 1.25% today. So let's go back to that chart. As you can see, in the most recent instances where there was a big drawdown, the next day was about 4, 6, 9% up. The most recent day on March 18th, it was down over 5%. It pretty much traded sideways by only coming back up 0.5%. So today's 1.25% rise isn't really what I was hoping for. I saw this chart last night, and once I saw these numbers, I thought, oh good, we're gonna have a really green day, and then maybe some of my puts will be secure and I won't get assigned any shares, and AMD will go up, my shares will get called away, and I'll make profit. But we only ended up 1.25%, which is a little bit worrying because maybe this is the top of another drawdown, but who knows, the jury's still out. But if we take a look at the most recent instance on March 18th, where the S&P only went up 0.5% the next day, it was overall green the next week at 3.2% and the next month at 16.7%. So, I don't think a continued rally is out of the question, but we'll just have to wait and see what happens. So speaking of which, let's see how my positions are doing this week. So here's today's graph on AMD. So we opened up really green on AMD, which is kind of what we expected because of that big drawdown. We opened up almost 4%, actually over 4%. And we were above $55, which is my strike for my covered call. And then we just slowly bled off all day long. Then at 2 p.m. we started rallying back up. And then we ended up closing the day green, but not by much. We ended up 1.3% or 1.4% in the green. And AMD closed at 53.55. So my covered calls were at the $55 strike price, and I sold them for $55 each. So obviously we're below my strike price, so my shares are not going to get called away. So I still own now 200 shares of AMD, which I initially had a cost basis of $52.95, but because I sold 2 covered calls and they expired worthless, I now have $110 of profit on AMD for this week. And then the other position I had, because I had a strangle on AMD, was that I had a $50 strike put, cash secured put on AMD. And because AMD closed above 50, I get to collect and keep that premium as well. So on that put, I had collected $36 in premium. So all in all this week, I made $146 on AMD, and I had $5,000 in collateral that I had in play at risk on my put, and I had 200 shares at $52.95. So let's just do 200 times $52.95. So I had $10,590 in cash tied up in stock, plus $5,000 that I had as collateral for my put. So I had total $15,590 in play on AMD this week, and I made $146. So if we just divide the two, my overall return on AMD this week was 0.9%, which is very good. I mean, that's a great weekly return, and that's only one of my plays right now. So I returned 0.9% on my investment essentially, and I still own 200 shares of AMD. So what I'm going to do is come Monday, I have two decisions, or I have two options I can make. I can either open up another position by selling 2 more covered calls on Monday at a strike price of maybe 54, 55, 56, or I can just hold off and just try and sell off my shares of stock flat out. It really is going to depend on where we open and see what happens this weekend. And it also depends on, when I say what happens this weekend, because what happens with AMD stock this weekend, meaning is it going to go up after hours, but also what the overall market and what the news is like this weekend. Because if I'm really concerned that we are at the beginning of another big dip, then I want to get out of my shares as quickly as possible and be cash as quickly as possible. So if that's the case, you know, I don't want to end up bag holding. So I might just sell off at a break-even price or a little bit of profit, because my fear is that if I do sell a covered call on Monday, and let's say next week is just a bad week and we just slowly bleed out across the whole market, well then the following week I'm going to be stuck not being able to sell a covered call for a good premium. So my mentality right now, based on what happened yesterday and today, is I'm kind of 50-50 as far as I think if this is the top or the beginning of another drawdown, or this is just a little hiccup and we're still in a bull market or a rally. So the safest position right now in my mind is to be as much cash as possible. So right now I have some cash, but I'll have to talk to you about my Micron position next, but I still own 200 shares of AMD. And so like I just told you, I have $10,590 in investment money that's tied up in my 200 shares of AMD. So I want to be cash as much as possible, because if we do have another dip, I want to be able to get in at a good position. So I'm going to try and get out of these shares. I was really hoping that today AMD would close above 55, and that way my shares would get called away and I'd make good profit and I'd be all cash in terms of my AMD play. But that didn't happen. At least we didn't draw down too much, because let's say I wanted to sell a covered call for Monday. I mean, these premium values are going to fluctuate. The one good thing is that today the volatility is still very high, which means that the premium values are very high. So for example, if AMD, let's just say, trades sideways and opens up Monday morning at 53.46 again, I can sell another 55 strike covered call for roughly $100, which is double what I received this week. So that's the power of volatility. So, you know, if I really want to get my shares called away, I can try the 54 strike and collect more premium. I'll collect obviously a little bit less in stock appreciation, or like I said, I'll just hold off and not sell any covered calls and just, you know, wait and hope to see that if the price goes or stays above $53 and just sell off my shares, because like I said, I own them at $52.95. So any stock price above $52.95 is going to be profitable for me. And in actuality, my cost basis is even less, because if you were to take the money I made this week, so I made $146 on AMD, you can actually subtract this from the 200 shares I own. So let's just say if you were to divide this by 200 shares, that's 73 cents a share. So my initial cost basis was $52.93. If I subtract 73, my real cost basis right now is only $52.20 per share. So in actuality, if any stock price that's above this, if I sell it, I will overall or be net green. But I like to think of my premiums as just kind of money in my pocket. I don't like to factor them in terms of where I pick my strikes or where I sell. So I just like to pretend like my cost basis didn't get any lower. So if I just set a rough estimate of a $53 stock price in terms of my minimum selling out, I'll still come out a little bit profitable at 5 cents per share. But that's my kind of mentality right now going into this weekend in terms of my AMD play. You know, I'll have to see what happens this weekend, because maybe I'll be a little bit less risky next week, and if I do decide to sell a covered call, I'll sell like the $54 call, or I could even sell a 53. It's because it's already in the money. I'll still be profitable in terms of stock appreciation, but I'll also collect $200 in premium times 2 of these. So I could collect $400 in premium and be very likely to have my shares called away. So that's kind of appealing to me right now. Again, this all depends on how the stock opens up Monday morning. So let's take a look at my other play that I had on, and that was on Micron. So Micron also, like AMD, opened up in the green, about 3.5% up, slowly bled off all day long, and just like AMD at 2 p.m. kind of trickled back up. We closed in the green, but barely. I mean, Micron was up about 0.3% on the day. So Micron closed at $48.69. So I had a strike, I had a cash secured put on Micron that I had sold at the $49.50 strike price. So because we're below that, I'm going to get assigned 100 shares of Micron for this coming week, which is fine. Again, so I'm going to have the same strategy because now I own 100 shares of Micron at $49.5. So I have the same decision to make of whether I want to sell covered calls on it, or do I just want to try and see if Micron gets up to $49.5 or higher and just sell off the shares flat out. So right now, I mean, if I were to sell a covered call at the $49.50 strike price, my premium is pretty good, again, because of the high volatility. I mean, the premium is $126 per contract, and I only have 100 shares, so I can only sell one contract. But I could sell another $49.50 covered call on Micron next week. So right now, I have some kind of dry powder to play with. I have $10,590 in cash that's tied up in AMD stock, and now I have $49.50 tied up in 100 shares of Micron stock. So right now, if you were to have a $25,000 portfolio, I have about $9,460 in cash to play with. So I could also next week open up another put position on AMD or any other stock. But like I said, I think I'm gonna play it out and maybe sit out Monday and not try and open up any more put positions just to see what the market does. Because like I said, I want to be cash as much as possible right now, just because there's too much uncertainty in the market, and I want to kind of see what we're doing. My biggest fear, and this is where the wheel strategy fails, and I get a lot of these questions of, you know, it seems like you can't lose with the wheel strategy. You can lose. Nothing is perfect. And the way you lose is when you pick a stock, you get assigned the shares at a certain value, and then the stock just tanks. So right now, if the whole market is tanking, I mean, you saw that big board yesterday. If the whole market is tanking, it doesn't matter. You're going to get assigned pretty much no matter what stock you picked. It wasn't like some stocks were up and some were down yesterday. Everything was down. So that's why I harp on making sure you pick good stocks that are good long-term holds. Because if you were to pick like a meme stock or some like hype stock like Hertz, I am willing to bet that a lot of people got assigned like cruise line stocks and Ford and GE and these cheaper stocks that really don't have a good outlook right now. And, you know, stocks like Hertz, for example, that are filing bankruptcy. I mean, for some reason, Hertz options are going through the roof. Let's take a look at some of the most popular options plays for today. So, you know, there's going to be a lot of people this week that had options expiring today that were on some not so great stocks, and now they're going to be holding shares of these stocks. And if we are in another dip, they're going to probably end up bag holding these stocks for a while, or just getting rid of them for a loss. So take a look. See, this is GE. The price is only $7. So these are cheaper stocks. I don't even, what is Met? Let's see what Met is. I'm not sure. MetLife, that was a very popular option today, and I'm not sure why. Another GE, Apple, or sorry, this is American Airlines, another Apple here, Ford, just like I mentioned. Here's AMD. Again, you know, for the third day in a row, this $60 call on AMD has been very popular. So seems like people are really bullish on AMD, which is good news for me because hopefully then it'll make it easier for me to get out of my shares. But you can see these stocks that are at the top of the kind of most popular options list for today are very different from the stocks you saw yesterday and the day before. So I think that's just a testament to kind of what people are thinking about the market. Look, here's Hertz again. So Hertz is only $2.85. So a lot of people are playing it because it's cheap. If you want to sell a cash secured put on Hertz, you only would need $285 for 100 shares. But there's risk involved, right? Because you don't know what Hertz is going to do. If they go through bankrupt and this becomes zero, well then, you just lost all that money. So be careful when you pick your stocks. I think that's the first thing you need to do is evaluate the stock that you pick and don't chase the money or chase the numbers. Make a watch list of good stocks that you like and then make your decision from that watch list. Don't just go out and trade on random stocks that you don't know about or you don't like. But yeah, it was a sort of a rough end to the week. It could have been worse for me, but like I said, I'm not upset that I got assigned to Micron shares because again, I like the company. I think they have a good outlook and I think they will rally back up to the point where I can sell off for at least for a break even. So let me know how you did. I'm sure, like I said, I'm sure there's a lot of people in the comments about getting assigned positions. So let me know what you got assigned. Let me know what your cost basis is. And then more importantly, so it helps other people, let us know, what your game plan is to try and get out of it or make a profit or break even. Or if you want to cut your losses and then get into another play, that's an option as well. So as always, thanks for tuning in. If you have any questions or concerns or comments or feedback, leave them below. And as always, happy trading.